Welcome to the Lifestyles Unlimited Real Estate Investor Radio Show, a real estate investment program. Listen and learn how to use real estate to build wealth and passive income streams for you and your family. We bring you experts every day to discuss and answer your questions on everything from single family homes all the way up to 600 plus unit apartment complexes. And now, the Lifestyles Unlimited Real Estate Investor Radio Show.
Hello and welcome to the show. This is Andy Webb with Lifestyles Unlimited. And as always, we're working on your financial freedom. And here we sit on the cusp of a new year, trading out the old one, getting ready for a new one, rolling forward with that new year. It's often a time of change for people, a time of transition. And I've got a guest with me today, a great guest. You're going to want to catch this whole show. If you miss it, you want to go to our website and get the archives there. But he's made some massive changes in his life. We're going to hear his story. And I've had the opportunity several times, actually, in the recent past, the past few months, to hear him speak, both at our 2-day financial freedom seminar, as well as part of the multifamily road trip that I went to just a week or so ago. He is one of our multifamily mentors, one of 3 that we have here in our Dallas-Fort Worth offices. He's got a great story. You're going to want to hear that. We're going to talk through that, hear about some of his investments, talk about the mentoring role, and talk to you about goals, because he's a powerhouse when it comes to setting goals. And that's really why, above all else, Alex, why I wanted to have you on for this show, because like I said, we are making that transition from year to year when people most commonly are thinking about these things. So let's give them something to think about. So without further ado, I've got Alex Clark with me. Alex, welcome to the show.
Hey, Andy. Thank you so much for inviting me on. It's an absolute honor, and I really appreciate this opportunity.
Hey, and it's a pleasure to have you on. I know you're a super busy guy in that role as a mentor, plus everything else you're doing in your business. So I know where you're at now. If I've heard your story and where you've come from, if you don't mind, if you take a little bit of time and introduce yourself and give the listener a feel from where you came from and where you're at now.
Yeah, sure. So like Andy said, I am one of the 3 North Texas multifamily mentors, and joined Lifestyles back in 2015 and came out of the gate just running. But before I had joined Lifestyles, I come from a background of poverty where money wasn't taught in my family, and the value of balancing out a checkbook was not important. And one day, while driving down the highway to my wait staff job, my car broke down. And I saw this, what I thought was an ultra luxurious, super exotic car drive by. It was just a Mercedes or a BMW. And I said, why can that guy have that car? And why am I broke down on the side of the road? So I did the only thing that I knew to do, which is I went to the bookstore, Barnes & Noble's, and I picked up books that had the title of Rich, Wealth, Millionaire in them. And I started to do what they said to do, which what they told me to do was to max out my 401k, my Roth IRA, buy bonds, gold, silver. I was a guy who thought buying silver and gold was fantastic because holding those tangible assets in my hand made me feel wealthy or a sense of security. And so I just started out by buying 1-ounce silver bars. And then I bumped it up to 5, 10, and I thought, wow, I could just buy gold. And so I started buying little gram bars of gold until I started buying 1-ounce bars of gold and would stick them in my safety deposit box. I basically did that after every single payday and just held on to them. And then my company started to offer paper bonds. I thought, okay, let's do that. And so I collected paper bonds. And looking back at it, those paper bonds didn't have any value for over 20 years that was worth anything. And so I put all my resources, all my spare cash into the typical things that everybody puts into them. And I would constantly have conversations with my friends at work or just anybody who wanted to talk about money because I was on this path that I was going to be a millionaire by the time I was in my 60s. And the reason I knew that I could do it is because I saw one of my coworkers who had worked for the company for 40 years become a millionaire on paper in his 401k and his Roth IRA. And he showed me what he had done and what he invested in it. And I said, I can do that, but I'm going to work a little quicker at it. And so maybe I can do it in 30 years versus 40 years. And so I went down that path. And then one day, one of my broke friends said, Alex, I'm tired of talking to you constantly about investing. It's all you ever want to talk about. Let's do this. Let's do that. And he wanted to spend his money, and I wanted to save and invest. And he goes, hey, talk to this guy. And he introduced me to one of my best friends now, who came to my office and spent 6 hours with me talking about Lifestyles Unlimited and investing in real estate. And after that one day of just that 6 hours of chatting, the very next 2-day presentation that David Fisher kicked off, I was there. And I was the guy in the front seat listening to everything he had to say. And David Fisher was talking about investing in single-family homes. And I thought, this is absolutely fantastic. I can do this. I understand it. It's obtainable. It's really not that difficult to do. I am going to be the guy who is going to invest strategically in this workforce housing. And so I kind of envisioned it like Monopoly, right? We all love playing Monopoly, Andy. It's one of my favorite games. And I used to dominate in my house until my kids and wife figured out my strategy. But my goal was to be the guy who owned the backside of the Monopoly board. You know, when you pass the go to jail, but before you get to free parking, I thought of myself as the guy who was going to buy that entire backside of the board, right? I could understand it. It was easily obtainable, and it made sense, and it was profitable. And by lunchtime on the first day, I'm the type A personality where I was like, okay, let's invest in this. And my wife's like, calm down, Turbo. Let's get through the first day. And we got through the first day. And towards the end, David Fisher started talking about economies of scale and multifamily investing. And when he started talking about that and how multifamily is valued based on the NOI, which is just income minus expenses, you get to the NOI, and how wealth can grow through multifamily investing, I couldn't wait to hear about it on Sunday the next day. And I was the first guy at the door. The place wasn't even unlocked, and I was there. And I had spent the whole night thinking of questions I wanted to ask him about it.
But you came back for day 2. What happened next?
Yeah, so towards the end of that first day, as David was just basically talking a little bit about that, the multifamily concept, economies of scale, you know, buying a 20-unit apartment complex, 10-unit, 100-unit, whatever the size is, and having all the residents under 1 or 2 roofs and how all that worked and the income, expenses, the NOI, the valuations. I really connected with that, and I understand it. And I'm a spreadsheet nerd. Spreadsheets are my Game Boy, and I understand that kind of thing, right?
Yeah.
So, again, I was the guy who was there, the very first guy in line Sunday morning, and I had just over 100 questions that I had written down for David after going through his book. And as soon as he walked in the door, I started to pepper him, and he puts a hand up. He goes, did I hear your wife say, calm down, Turbo? I was like, yeah, she tells me that sometimes. He goes, calm down, Turbo. Let's see if I can get those handled for you today. And you know what? He did. He crushed it, and he guided me. And so I had joined that day, and he told me, Alex, don't invest in the first deal you see, okay? Take some time, look through them, right? But I was having none of that. I was ready to rock and roll. I came to all the events right after that, and I met a lead investor. And I talked to the lead investor about the deal and invested in it. Of course, I didn't listen to David. I was in the first deal, and it was 600-plus units. And hook, line, and sinker. I was in. I reached out to the investor, asked a bunch of questions, got the financials, understood the business plan, and just kept rolling. And so I got into that deal. I got into the next deal, and then something happened. I ran out of cash. So what did I start to do? I started to look for cash. And where does one find cash? Well, in my particular instance, I had a 401k, 529, Roth IRA, stocks, bonds, silver, gold, even did a little option trading, which was a nightmare. And so what I started to do strategically, I started to liquidate everything. And so how does one get a hold of his 401k dollars while they're still working? Well, there's attorneys for that. So I did that. I liquidated the Roth IRA, the IRA, sold all the stocks, the bonds, the silver and gold, even the Holy Grail, the kids' 529 savings plans, liquidated those down to $0.
No, say it ain't so.
It is so. It is so. And bought and invested in multifamily just nonstop. And then I became what's called a lead investor or a syndicator. And I syndicated several deals with other investors who put anywhere from $25K to $100,000 into the deals. We partnered together. And the first deal I did in Dallas, a small property where we bought for $1 million. We invested in it, fixed it up, held it for a year and a half, and sold it for 180% return on the investment. And
wow.
I just kept rolling with it from there. And then I did what's called an IRO, an independent rental owner, where I went out by myself and bought a small property. I partnered with a buddy. We went out and we bought a property together, and we would just buy these things and cash flow, and some we would just sell after a couple years. And the cash flow from these was way above and beyond the projected cash flow, for instance, on the kids' 529 savings plan. And the cool thing about it is I was able to direct the funds. I didn't have some unknown entity somewhere in the country and some Washington high-rise or New York high-rise directing my funds into, say, something like bonds, right? Bonds. I mean, what a joke right now, where they won't even get close to a 2% return, right? And here I can invest in multifamily, getting 5 times that return in some properties.
Cash on cash, but then you got that 180% capital gain. I mean, it's amazing. I know we're not going to get into the 5-6 ways we make money here, but there are all sorts of different levers that you're pulling on in that investment, aren't you?
Oh man, it's huge. You get a cash on cash return. You get the tax benefits. That's huge for anybody who has a W-2 job and how to offset the tax liabilities. And then you get the funds at the end of the rainbow, which is the disposition or sale. That made a huge difference on our lives and allowed myself and my wife to retire after 4 years. But it didn't happen just, so easily. A couple of years into it, I was having this conversation with my wife as we're driving to our parents' house. I said, "Hey, honey, I've got an idea how we could retire." And she's like, "Great, let me hear about it." And I said, "Let's sell the house." She's like, "The house we live in?" I'm like, "Yeah, let's sell the house we live in and move into a rental." She looked dead into my eyes, through my soul, and said, "You want to sell the house that your grandfather baptized our son in? No way. Absolutely not. I'm not doing that. That's crazy." I said, "I understand it is kind of crazy. It's out there. It's extreme, but here would be the result, like retiring from our jobs in our 30s. And she wasn't on board at first. And so we just kept talking about it. And a few months later, she said, "Do you really think we could do that, where you could retire in a year and I could retire in 2? I said, "I'm absolutely certain of it. The spreadsheet doesn't lie. The numbers don't lie." And we had seen a bunch of our other friends and different members that were retiring from their 20s to their 60s. I remember seeing this guy walk across the stage saying, "I retired." And he was early 60s, and he had tears streaming down his cheeks because he said, "Guys, you just don't understand. I never saw a path to retirement because I didn't do things the right way like you're supposed to. I didn't save and invest like everybody else. It took me years to really get on board with that. And it didn't happen until I saw everybody around me, how they were making money, how they were investing, how they were retiring, how they were moving or supporting their lifestyles. All these different goals were being achieved, right? And so I said, they can do it, we can do it. And the map is there." And so she came on board with it, and we sold the house. And we moved into a crappy rental.
Go ahead, yeah. Okay. You did sell it.
Yeah. We did sell it, and we moved into a crappy rental. I said, "Let's just do it for 1 year." And then we got close to that renewal time, like 10 months into it, 11 months into it. I said, "Look, we got to do it 1 more year." She goes, "I'll do it 1 more year if you promise me that you will build me a house better than what we sold and what we gave up." I said, "I promise you." And so 2 years after living in that rental house, we moved into the house we're in now, which is a house that is twice the size of the house we sold and sacrificed to get to where we're at now.
.com. Now, Alex, as I've been listening to you talk, you mentioned that you're a type A. Interestingly, you're a type A that's good with spreadsheets. I don't associate the two, but that's good to hear. Your wife, on the other hand, it sounds like you've kind of had to pull her along a little bit here and there. Is she a type A or a type B?
Yeah, she's a type B for sure. Optimistically cautious type of person.
So she takes a little convincing here and there, right?
Yeah, she needed to see the numbers, dip her toes into it, and but once she sees it and understands it, and feels comfortable with it, she was all in because she didn't fight the numbers. She saw no reason to fight the what was abundantly obvious in the program and how it all works. And it was really magical. One day one weekend we were on vacation at Universal Studios, and one of the properties we had invested in a dozen deals passively, and one of the properties that we had invested in sold, and we got a notification on our phone from our bank account that a deposit had been made. And one really cool thing is within Lifestyles, we have this portal called Podium, and we can upload our docs to it, and we can upload our account information where we want our quarterly distributions to be made to, or when a property sold, the money is just automatically wired there. And that's what's great about being a passive investor. We didn't have to do anything. But we were at Universal Studios waiting in line for a Harry Potter ride, I think it was. And we get a ding on our phone, we look at it, and one of the properties had been sold. And what was crazy was it was the end or the end of the quarter or the beginning of one of the quarters. I don't remember. And during that trip at Universal Studios, we had 3 distributions. And she's like, oh, my gosh, I'm sold. And I used that to lead up to the selling of the house so we could invest passively in more deals, syndicate the deals, IRO in the deal. And that's what kicked us off into both of us retiring the same year in our 30s. And what was crazy with her as a career teacher who's got a master's degree, so she's a high intellect, the whole 4+ GPO thing, magna cum laude in her schools, and nothing but A's her entire life, right? And after seeing that, and after getting Teacher of the Year, she retired. And I remember her telling me, my principal cried today when I told him I was retiring. He couldn't believe it. He was like, what's wrong? Is everybody okay? Is everybody healthy in your family? And she's just like, yeah, we're financially free. We don't need to work at this anymore. But the thing is, we didn't stop working. What we did is we shifted our focus into what we were passionate about and being able to be the captain of our own ships and being able to control our own destiny and direct where our investment dollars and our money is going. And that made all the difference in the world for us. We haven't stopped. It seems like every other month we're investing into multifamily one way or the other. And what's great is we have, within our group, we have what's called aspiring leads and leads and IROs. And again, the IRO is just someone like you or me who goes out and buys their own property. And all of these groups have masterminds. And every month, the aspiring leads get together for a mastermind. And we talk about anything and everything that's on their mind for somebody who's never bought an apartment complex. And all these conversations, which is great, are guided by our white paper, right? It's a 47-page document that was written by the members, and the leads had input, the mentors had input about what like-minded investors think about multifamily and how do we want to operate as a group. And all the aspiring leads and leads follow this white paper, or these best practices and guidelines, and we apply that to our masterminds that we have for the aspiring leads and the leads. And the great thing about it is if you think about where you have 50+ lead investors coming together every month and they talk about everything you can possibly imagine, from income, expenses, parking, just roofs, anything you can think about in all the markets within North Texas, East Texas, West Texas, primarily for the DFW office, what are the odds that we're going to fail? It's slim to none because we have access to the best talent from guys and girls who bought one property to guys and girls who bought portfolios of multiple properties that are over 600 units.
Yeah, it's very powerful. So it's not just the mentor. What I'm hearing here is it's not just you and the other 2 multifamily mentors, but it's this whole brain trust of experienced, different levels, of course, but experienced multifamily investors that are coming together. And if I'm encountering a problem, one of them probably has encountered it and has the solution, don't they?
Yeah, and it's not just problems. It's actual successes. Hey, I'm doing this, and this is making the property more money. And every single month that I go and participate and lead one of these, I learn something. And I think to myself, my gosh, I should have known this. But I didn't think about it because there's a lot to it as a lead investor or an aspiring lead. But the passive investor, there's nothing to it. You get paid even when you're in Universal Studios standing in line, and here's your quarterly distribution, and you just get a ding on your phone letting you know you received the deposit. And that happens to us, Andy. Every single month we get some kind of distribution. And it's been like that for years because what we've done is we've just kind of done this snowball effect where we take the profits from our deal, we build it up into some more cash, and once that cash hits a certain level, we never touch it. Boom, we reinvest it into another deal with another one of our friends that we have a relationship with.
Yeah, very good. That I love the cash flow snowball. That just continues to grow. In your case, probably equity snowball. When you have that 180% return, get that into the next couple of deals, it magnifies. It's exponential.
Oh, it does. And I can give you another one. Myself and my buddy, we bought this property for less than $500K, and we held it for 2 years. And we didn't really plan on selling it right away because it was cash flowing over 30% on an annualized basis, which is unheard of. But we bought right. It wasn't operated at all. I used to tell people that this guy kept his financials written down with crayons. It was so bad. I mean, it took me a long time to even get this little deal closed, the longest it ever took. And so we held this deal for 2 years. But as we were holding it, I will tell you, not a single month went by where people weren't sending us emails, calling me, reaching out to the property manager saying, hey, is this for sale? Is this for sale? We want to buy it. We want to buy it. We want to buy it. We eventually sold it for, I think it was about a 360% return on that.
Wow.
And let me tell you, the funds that helped me buy this came from my kids' 529 savings plan.
All right. Hey, they are set now.
Yes, they are.
Let's shift gears. Let's get into that now because I want to give the folks out there listening something to take into the new year that can propel them forward, whether it's real estate investing or anything else in life. Let's get into goal setting and really getting that direction that a lot of us need.
Yeah, I think goal setting is everything. You know, I'm afraid that most people spend more time focused watching TV, figuring out who got kicked off the island versus spending time working on their own lives and planning their own trajectory. You know, it's one of those things that when you choose not to set goals, nothing in your life changes. And, you know, for years, I'll use myself as an example. I would say, I'm going to do this and I'm going to do that, but nothing ever really changed until I put my goals on paper with purpose. And I basically had a roadmap on what to do. So I would write it down. I would put a date to when I planned on achieving it. I identified the groups or people I needed to work with, mastermind groups, lifestyles, or anything. I mean, anything. I spelled out the plan of action, set a time limit, and outlined the benefits to me. Now, these are your goals. You are creating these goals for you, for your family, for your organization, for your business, whatever the case may be. But what are the benefits to you? And see, if you know the formula, it doesn't make any difference what the goal is, right? And my goal was I wanted to retire in less than 5 years. That's initially what I wrote down. And then the next thing is, where am I going to write these down? And again, I'm the A type. I need to organize my thoughts. I need to have a roadmap. And so what I did is I started looking up goals. And I went to where everybody else goes to buy their stuff, Amazon. And I looked at all these performance planners. And I bought this Zig Ziglar performance planner. And I Googled it and then went on YouTube. I call it Uncle Google. And went on Google and I found a YouTube video about how to use a performance planner. And so I did. And so I'm so strict about this in my life that I have goals every single day, 7 days a week, 365 days a year. And I plan my weeks in advance. But here's the great thing about planning and goal setting. If you revisit your goals for the month, for the quarter, for the year, 2 years, 3 years, 5 years, and if you're crazy, 10 years, who can keep a goal for 10 years? But it's worth writing it down and putting it on paper with purpose if it's a huge, gnarly goal. When I set my goals for the month, I will revisit them at the beginning of every month. And what I do is say, okay, not the first day of the month, but within the first 5 days of the month, I'm going to revisit my goals. And some months, my goals don't change. But some months, I'll come back in and I'll change a date. The reason I do that is because it's my goal. It's my life. I can pivot at any time. And then people say, well, I don't know what kind of goals I want. And then I tell people, well, you know what you need? You need a vision board. And what is a vision board? A vision board is, for me, I have 3 of them. They're all 3 of them. Each one of them is 12 by 48 inches. And one of them, what I did is I spent a week working through all the things in life I wanted if money was no obstacle. So I want a car, a jet, a helicopter, amazing watches. And then another vision board that I have is just quotes, amazing quotes by Plato, Arnold Schwarzenegger, Aristotle, Alexander the Great. Pick any of those great quotes, right? And so that would be the other vision board. The third vision board is the great minds of our time, from Robert Kiyosaki, Colin Powell, Abraham Lincoln, Mother Teresa, just anybody you can think of, all the greats of our times. And it's anybody who's inspired you in any way, shape, or form. And so the purpose of that is to help you with your goal setting. If you're thinking about what is it I want 1, 2, 3, 5 years down the road, what am I working towards, right? And so sometimes when you're working towards your goals, you have struggles, failures, setbacks. And that's also the purpose of the vision board, is so you look at your vision board and it helps recalibrate your mind and get you refocused on why you're focused on your dreams and what your dreams are and what you're working so hard for. And then I would put other things in my office that inspire me. I have a picture. It's called the Money Lisa. I have another one in my office that says, you can't deposit excuses. Entrepreneur, a person who's up late working 100 hours for themselves to avoid working 40 hours for someone else. And just all these things around me and in my life to help guide me on whatever it is I want, whatever my goals are. And back then, the idea of retiring in less than 5 years, I would always hear David Fisher say, you can retire in 2 to 7 years. And I'm like, man, 2 to 7 years. Okay, I'm going to do 5. And Sharon and I, we were able to do it in 4 years. But you know what? We paid the price now so we didn't have to pay it later. And that was a big moment for us. And that was the sacrifice that we made by moving into a crappy rental house for 2 years in a crappy neighborhood that my kids couldn't go ride their bike out front unless I was right there with them.
They gave you that focus, so they kept reminding you of why you were doing that, suffering, whatever, as it were.
That's exactly right. It just it helped keep us focused, because I'll tell you what, for me, living in the rental house, it was, again, I felt captive to somebody else, beholden to somebody else, and I am not that kind of guy. I have to be the guy that is the helm of my own ship, directing it through the currents, however I want to, where I want to. It means everything to me. And I constantly will talk to members who are joining, and they know that they want to be a member. They know that they want to make money. They know they want to invest. And they'll ask them more probing, well, what do you want to do with that money? Where do you want to be in 1, 2, 3, 4, 5 years from now? And the vast majority have no idea. A handful do. But what's great, if you know that you have a goal, you write it down, you put a date to it, you ID the obstacles, ID the people and groups you need to work with, find out who knows what and what you need to know, create a plan of action. Again, it doesn't matter what the goal is, just as long as you have the formula. And one after the other, I see people solve it, achieve it, in their own time, at their own pace, depending on how hard they want to work at it. Because not everybody's a type A like me who's, told, calm down, turbo. Let's get through this a little bit slower.
Yeah, I'm a type B, Alex, so I'm definitely a little bit different. I don't have a journal, but I've actually been jotting down notes here as you've been speaking. I've never done a vision board, but what I do for my goal setting is I've got it's like a 22 by 28 inch, that kind of cardboard poster board you get for science projects or whatever. It's visual for me, but we write our goals down on that for the coming year. I have not gone beyond a year, but we do start to dial that down into quarters, into months. I've not gotten to the daily, though. So I think I've taken some learnings away from this conversation on things I can do to maybe get a little more focus, especially as you and I have been talking about the small multifamily, the independent rental owner deals, getting into that vein. I think that's the kind of granularity that I need personally to move forward in that space. And that's where our goals as well. So to the listener, visual, get that visual thing out there. Goals, get it to paper. Your brain is pretty ethereal. Those things come and go. You may forget your why. Get it written down. Hey, Alex, we've run out of time. Boy, I think I could keep going with you. I do appreciate your time today for sharing as you have.
Thank you. I appreciate it.
Absolutely. And to the listener, if you want to learn more, go to lifestylesunlimited.com. You can catch this program there. You can learn about our free workshop and as well the 2-day financial freedom seminar. Thank you for listening. You've been listening to the Lifestyles Unlimited Real Estate Investor Radio Show. And remember, it's not the money, it's the lifestyle. You have a good day.
The information and opinions you hear on the Lifestyles Unlimited Real Estate Investor Radio Show are those of the hosts, guests, and callers. The Lifestyles Unlimited Real Estate Investor Radio Show is for entertainment purposes only. Please consult a professional regarding your personal investment needs. Nothing presented constitutes an endorsement, recommendation, offer, or solicitation to buy or sell any product or security.